What's up, everybody? It's Big Cheds coming to you on a Friday, April 28th. I am uploading episode 28 of the Bitcoin Ask Me Anything market updates from the Twitter Spaces series. This will go into the playlist for Twitter Spaces. This is just a complete treasure trove of, I don't know why this is here. I'm watching some stuff. Just a complete treasure trove of information for new traders. Check those out. While you're here, also check out the playlist, the masterclass tutorials, market updates. I'll be doing some new ones soon. Free version of my book as well, Trading Wisdom. It's available on Amazon right now. I recently published Trading Quotes, my third book. That's available as well. Just to remind everyone, I'm a founding analyst at Bitcoin Live. I do a twice a week full market update for almost 5 years now. Check out the free, go to public blog. There's some free reports as well. The March report is up there, so you can kind of see what we do. So I'm going to go ahead and hit play, and I'll be hanging out, and we'll recap at the end. So I hope you folks enjoy this, and thank you very much. Let's do it. What is up? It's Big Cheds. Folks, give me just a minute or two while we're kicking things off, giving people a moment to join the spaces. If you're listening now on replay, it's some period later. This is an older spaces that I've uploaded to my YouTube channel. And so it's great to have you there as well. But for the folks who are live, it's funny how I say that because this will be uploaded later. So just kind of hang in there, folks. I'm going to get the room filled up, and we'll have a lot of fun today. So thanks for hanging out. All right, let's get this started, folks. I'm Big Cheds. Find me on Twitter at Big Cheds. Find me YouTube at Cheds Trading, author of Trading Wisdom, 50 Lessons Every Trader Should Know. It's available on Amazon. It's done really well, and thank you. I appreciate that, folks. You can get the free version of that book, the best-selling book. Get it on my YouTube at Cheds Trading. There's a playlist called Trading Wisdom. I actually just published another book called Trading Quotes. It's kind of my wisdom, 365 original quotes by me, kind of wisdoms, trading quotes that are wisdom. Little play on words there, trading wisdom, trading quotes. So that's out right now. If you're curious, check that out. I have that's available on hardcover, paperback, audiobook, and Kindle. I'm actually in the process of publishing a quick re-edit on Trading Wisdom, kind of the third version of that. I've gone through and I'm kind of updating things to reflect a more mature writing style, fixing a couple things, tweaking it. So keep an eye out for that here pretty soon. Um, I'm a founding analyst at Bitcoin Live, which is a world-class team of analysts who cover crypto. And I've been with them for almost 5 years. And I do a twice a week full market update, Wednesday and Sunday night. Probably will get a bunch of members here in the space as we always do. It's great to hear from them. If you're brand new, you kind of want to learn TA, go to my YouTube channel at Cheds Trading. Check out the playlist Masterclass Webinars. And that will kind of help you kind of get your feet wet. There's 3 beginner and 1 advanced webinar, kind of teaching the basics, classical charting, Japanese candlestick analysis, all that good stuff. And I definitely want to mention the spaces is sponsored by BingX. It's really just a wonderful exchange. You can do crypto, Forex, commodities, and indices. I've actually worked with them for quite a while. It's a really nice team. And anybody I know that's worked with them, and traded there has enjoyed it. So the information is kind of attached, to the top of the spaces. There's like a trading bonus and sign-up bonus, all that stuff. So if you're looking for somewhere to trade, check that out. What I want to do today is I want to hear from you folks. We'll talk. I can tell you. I'll definitely tell you my thoughts and what I think is going on. But what I like to do is just hear from you, and that's what kind of makes this worth it for me. I should mention this is episode 28. There's 27 of these. If you go to my YouTube channel, the playlist Twitter Spaces, so I upload these, to go back and listen to. And if you're a new trader, it's really a wonderful resource to kind of hear questions and answers and that kind of thing. But today, I want you to hit that button in the bottom left that says request to speak, or it says microphone or something, one of those things. And I want to bring you up, and I want to kind of hear from you about how you're doing, what you're thinking, what you're feeling. And it leads to a really nice, honest, open conversation. We're tweeting at each other. There's no like nuance. We don't know if someone's trying to fight with me. Are they agreeing with me? Are they disagreeing? And these Twitter spaces create really like a nice opportunity to talk. So I encourage you to take advantage of that opportunity and add your voice to the conversation. I'm going to bring you up to speak, probably 3 at a time. But then, when I call your name, it will be your turn. So kind of just let me handle bringing you up, and I'll let you know when to unmute. So just kind of hang there until I call your name. If you've, I'll probably get a lot of return people. But if you haven't spoken before, this is the time to do it. I think you should take the opportunity now and today to hit that button, to come up and add your voice to the conversation. We've got a couple hundred people here listening, which is great. We'll get more as time goes on. I'm going to start to add people, and just go ahead and wait until I call you. I want to kind of hear what you think, and we'll go from there. I'm starting to fill the room. Give me just a moment. Just a moment. And why don't we start out with, and folks, again, let me handle your, please let me, don't unmute yourself until I call you. We'll start out with Doka. Doka, why don't you go first, Mr. Doka Mook?
All right. Good evening, Cheds.
Good evening to you.
I'm glad to be here. It's my first time on your Twitter Spaces. I've been
Thank
following
you.
you for about a year now, and your content has been very, very informative, educative as well. I'm from
Thank you for
Nigeria.
saying that. Thank
Yeah,
you
I'm
for
from
saying that. Yeah.
Nigeria. I'm a relatively new trader,
Okay.
so yeah, I'm just trying to learn the ropes as I go and earn a little buck here and there.
Yeah.
So what I think is happening or is going to happen with BTC, we agree that we smashed some resistance there at about 25,000 to about 25 two thereabout. I think what's happening
Mm-hmm.
here right now with the little knowledge I have of the chart is a pullback.
Mm-hmm.
We're having a pullback. I still believe that we're going to go as high as 26.4 to 26.6 before we
Okay.
see any reasonable um, um, downturn, maybe back to the 21K region or so. That's just what I think, what I see from my charts. And
Tell me why. Tell me why that level, 26 rather than 25.5, 25K, which seems like a really well-defined level to me. Talk to me a little bit about your thinking.
yeah, I think why I think 26.6 is that I'm seeing some after the major level at 25.5. I still think there
Uh-huh.
is another major resistance there sitting with a long wick right there at about 26.4 to 26.6 with a little I can see
Uh-huh.
on 4 hour time frame. I am currently,
4 hour. Okay.
yeah, I
Mm-hmm.
saw that on the 4 hour and also on the daily. I'm looking at my chart right now. If you look at the daily time frame, you see
Okay.
feeling there's an imbalance right there. As an imbalance if we're using smart money, there's an imbalance right there at
26.
about 26.4. If you can look at that
Uh-huh.
on the daily time frame, there's an imbalance sitting at about,
Are we talking about the Bitcoin USD pair?
yeah, Bitcoin USDT.
Yeah, because I don't really see anything between 25.5 and 28K, honestly.
No,
There's a gap. There's really no
not
resistance.
not 28, not 28, 20.
No, but that's what I'm saying. I'm trying to follow you, but I don't really see any resistance,
There's
at
an
20
imbalance.
in the 26K
There's an
range.
imbalance. FVG fair value gap
Uh-huh.
at 26.4. There's a fair value gap on the day
Okay.
at 26.4. You can look at that.
Uh-huh.
There's an imbalance right there. So I'm thinking price action
Mm-hmm.
is going to go for that. It's just a thought
Okay.
because I know
Okay.
I know that immediately after the resistance was met, major level there at 25. Let's call that 25.2. I expected a pull,
Yeah.
and I think it's still going to go
Uh-huh.
ahead. To Of course 25.5 is major, but I still think that imbalance at 26.4 should not be overlooked. That's just what I think.
Good. I think it's great that and thanks for kind of talking me through your thinking. I think it's great that people can look at the chart and come up with different conclusions, because I think if we all like looked at it and had the same levels and the same like ideas, nothing would happen. I don't think we would have much volatility, and that would be boring.
Yeah.
So I think it's good, and I don't necessarily agree with your assessment, which is fine. Like we don't have to. It's good to have different opinions.
Yeah.
That's a good thing. I think we should embrace the disagreement. And so, what did you want to maybe fire away a question before let me while you have me
Yeah,
here?
I'd like to.
Is there
I'd
anything you
like
want
to.
to ask
I
about?
follow a lot of your. I follow a lot of your updates and all. I would like to know what's your major. What is your strategy though? Do you just work with moving averages, or you are more of price action, or or you're more of the charts of the candlesticks or whatnot? Because I
Yeah,
think from what I see from what you do, you use a lot of confluences, but what's like
yeah.
your major strategy to really
Hmm.
results? That's what I'm interested in.
So, have you watched my masterclass webinars on YouTube?
If I'm being honest, I just saw a few videos. I've not seen the masterclass yet. If
Yeah,
I'm being
go to
honest.
my YouTube and start there. That's kind of where you want to start,
All right.
because what I do is I explain how to use candlesticks, the importance of volume, moving averages, support and resistance, diagonals, horizontals, divergence. I kind of go through everything. And I made those because I had a lot of repeat questions over the years. And so that kind of, I started recording those just as something I could point people to.
All right.
So that will explain my style. I do a blended style of Western and Eastern TA, classical charting, and Japanese candlestick analysis.
All right.
And I'm really focused more around, and I combine my TA with sentiment analysis. So I get a sense of what the market's feeling, and I combine that with TA. And it's, if I were to simply describe it, it's really just price in relationship to support and resistance. So I kind of wait for the price to clearly define a level for me, and then I kind of see how the price responds to it. Does it break it? Does it not break it? Does it temporarily break it and come back? I look for kind of momentum reversals, and I pay attention to clusters of candlesticks. I look at wicks.
Yeah.
I look at moving averages in the right context, because there's a lot of different context to things. So I would start with that YouTube channel, go to that playlist of the masterclass webinars. I think you'll love it.
Beautiful.
All right, brother.
Beautiful. Thanks a lot for your time. I really appreciate you. Thank you.
Hey, stay safe. Thanks for stepping up.
Yeah. Thanks, man.
All right, man. Let's go, Black Sun. And folks, when I bring you up, please wait. Do not unmute yourself. Let me be the one to unmute you. Black Sun, what would you like to say today? It's nice to have you join the conversation. Black Sun Holding. Can you hear me? I'm going to give you about a 5 count before I move on to the next guest. Black Sun, 5, 4, 3, 2, 1. Why don't you hang out there, Black Sun? Let's go to my man Ebram Sharif, who's a returning guest.
Hey, Cheds, how's it going?
What's up, man? How you been?
Good, good. How are you?
I'm doing fantastic. It's super warm. I was just shooting some hoops, and I'm sitting outside in February, which I would not be doing for Spaces.
Good,
So,
good to hear. Good to hear. I'm freezing where I am right now, so at least glad that you're
oh
enjoying the
no,
stuff.
good.
Yeah.
We'll keep you warm here with the chat. So, what's going on?
Yep. Yeah. So I know by knowing you already, this is a place where you wouldn't be a buyer. You'd probably still wait for either a throwback or a pullback or to break
Yeah,
through 25.5. I'm looking at the
yeah.
daily candle and I don't like how it looks like though. Is that something like comparing this to where we topped in the
It's a
previous
shooting
cycle?
star right now.
Exactly. Like,
It's a shooting star right now. Yeah.
yeah, I've seen the tweet you made today where you made a comparison between this and the last time we had an upthrust near the cycle top at 69. Would that still?
That was more of the spring, not the upthrust. That was in relation
Hmm,
to the temporary deviation of 22.5K. We had a rectangle 60K back in late October, and we broke below 60K
right.
and quickly recaptured it. So I was kind of anticipating that with the 22.5, and it played out. Because we kind of get that final push up to the range highs, mid 20, mid 25K, mid 25Ks. I've been saying I almost felt like it was inevitable to get there one way or another. I'll kind of riff on that for a minute, and then I'll let you clarify your question. Um, I would expect it to reject there, which is why, like, if it doesn't reject there, you have to buy. Like, it's just, we've had a strong move up into a very well established level, 25K, 25.5K. And so now you want to be looking to buy dip on the higher low watch, 21.5, 22.5. And so that's my focus. I'm already long from 18.5, but I'm not buying here with the short-term reversal candle, the shooting star. You got to let that play out a little bit and kind of see where the buyers step in.
Yeah, exactly. So the questions was like, would you be a seller towards like the top of the range, which probably already answered by either just waiting it out and seeing if it breaks through or not at all. And
well, it's not all or none. When I say I'm a seller, like it doesn't mean I would exit my long position. I might sell partial. Like I would take partial profit, right? And I do that where I have like multiple positions at the same price initially, and then I'll kind of stagger them along the way up. So if I had taken no profit, I probably would take sell like 25% of my position, right? Still thinking that bulls have the momentum and they're likely to eventually break through that level. But I would still take some profit just in case, just in case that would be the top. But I would never preemptively close my position entirely.
yeah,
right?
yeah, I agree.
That's not how I operate.
Yeah, but by seller probably also meant like, would you maybe take some shorts to hedge your long position?
Sure.
Yeah.
Absolutely. And it's because you can clearly define when that short idea would fail. I mean, above 25.5, the short fails.
Exactly. Right. That makes sense. And probably going long towards another retest of the MA 34. It has held this time. Maybe that's where I'm eyeballing the next entry for a long.
Yeah, sure. That's reasonable. Yeah, that's reasonable. Yeah.
All right. This is the
All right, my
thoughts that I
man.
wanted to bounce with you. All right. Thank you.
Good to talk to you. Thank you so much.
Thank you.
All right, Black Sun, we'll give you a shot if you're there, Black Sun. If not, I'm going to move on. Black Sun, are you there? Let's try Trade with Me, who's here before and dropped out. Trade with Me. Why don't you go ahead, bud? Trade with me, Ali Hams. What would you like to say today?
No, how are you doing? You okay?
What's up, my man? How are you?
I'm good, thanks. Thanks for having me.
Sure.
My question is, I've been learning during the bear market quite a lot, but according to me, what I've learned, the 12K hasn't been tested on the monthly time frame. So do you think that the bottom is in? Because I do have cash on the side for the alts.
You have cash on the side, yeah.
For the alts, I've been very patient, but I am in like 30%. But do you think we'll touch that level or not?
Probably not. Probably not. I'd say the bottom is probably in.
Probably.
It's much more likely in now that we've jumped back above 18.5.
Right.
If you think about a couple things you want to think about, because obviously that was a level to watch. I talked about it on the longer time frame. That was the 2018 high, 2019 high, and 2020 high. It's a well-established demand area. And if you look at what the price did leading into the bottom, is it went sideways for 150 days. And the bottom of that range was 18K. When we lost it, right? And then came back and recaptured that. You always need to pay attention when there's that momentum reversal. And that turned all that price action below 18K into a bear trap. It made that a deviation. It made it a spring. And so when we were able to punch back up above 18.5, that made it much more likely that the bottom was in. It doesn't mean it's guaranteed in. Obviously, I think if we flip 25.5, the bottom's in. Because you'd be on the weekly time frame, you'd be back up above the May 12th low, above the weekly 200, above the weekly 50, all sorts of stuff I've talked about a million times before. So it's a probabilities thing, and I think the bottom is probably in.
Right. Thank you for that.
Thanks, man. Thanks for stepping up.
Yes.
Travel, Surge Me. Travel. You changed your name from when I had you up. So ETH Daddy, Surge Me. What's going on?
Big Cheds, how you doing, man?
I'm hanging.
All right, right on. I'm a big ETH fan. Been in since 2017. I caught it, and
how'd you get introduced to Ethereum?
Yeah, most.
How did you get introduced to it? How did you get introduced to Ethereum?
I tell you, man, I was looking in it's a longer story, but I was looking for alternative investments. Okay, I'd come into some cash, and I was looking for alternative investments. I was looking at gold miners, and then I ran into
Vitalik Buterin at the gym.
You got it, and blockchain book. Okay, and blockchain.com.
Yeah.
And it just threw me. Man. I went, whoa. Yeah. This is going to be used in the future, man. What
was it, like $80? Was it like $80 when you got in there, or what was it at?
20.
Okay, that's pretty good.
Yeah. I saw it at 20. but I couldn't get in. At the time, man, you had to go to the bank and wire money to the freaking, I think it was Poloniex or something like that.
Yeah.
And they would only allow a certain amount. And I'm watching it go up. It was crazy times. It was very, and anyway, so this is, that's where the surge me comes. I'm looking forward to this new, with Vitalik's up to, man. The kid is just incredible. Long story short is that first off, I want to tell you, I trade more on like sentiment, okay? And so I'm on your Bitcoin Live, okay?
Oh, good.
I caught you about a year and a half ago, you and Bob, and I tell you what, man, you saved my ass, dude. And I want to tell you that in the spring of this year.
Give yourself credit though, because you did whatever you did it. I just best advice, best opinion.
No. Okay, well, I mean, the spring of 22, I was feeling pretty good about things, and I was looking at, the ETH price was right around 3 Gs. And I was looking at, okay, you know what, my life's pretty good right now. But long story short is, you in Bitcoin Live, you put it out there, and you kind of, and the best traders, they test their own theories, right? You have to think the other way, and I appreciate that. That was the change for me, and I went with that against my, I'm an optimist at heart, right? And so I went against that, and I said, okay, man, I need to sell some good amount here, I'm not very comfortable shorting. So I just said, you know what, I'm going to sell. And dude, you guys saved a bunch of money, man. And I just want to thank you for, yes, I did it correct. But at the same time, man, of the contradictory thinking, saying, hey, I don't like this setup here. I don't like the way this looks, and showing me why you didn't like the way it looks. And I wanted to mention that to you.
That's really kind of you to say that, and I love this feedback because, and you hear me in every video. I put my heart into it, and I'm not always right, but I'm talking to you like I talk to a friend. I'm trying to give my best advice to, and
absolutely,
it's interesting. I've been reading a book called Thinking in Bets by Annie Duke, who's a former poker player.
Yes, I know that.
She actually talks about, and I have a tweet in my book in my trading quotes where it said a true chart technician can articulate both the bullish and bearish thesis. And it's you have to, that helps you, because if you just have an idea and you get married to it, if you can't, you got to try to say, wait a minute, what am I maybe missing? Let me see if I can, look at it from the other direction. And it's just a really healthy way to approach markets, especially when they're so probabilistic.
Absolutely. It changes the way you look at so many different things too.
Really
after you can take the other side of the coin and go, okay, wait a minute here. What am I missing here? Why am I so bullish right now? Say, okay, why am I so, and things are pretty good right now. Let's take some off the table here. And looking at that, and no, you're correct. You're not right on everything, but who is? Okay. And I know that you just the other day you mentioned something in Twitter, man, about the precious metals, right? You said, hey,
I got that one wrong.
But you came out and said it, that is, and that is, that's why when I see you up here on Spaces and stuff, man, I said, hey, man, I got to take a listen, and I appreciate what you do for not only the community, but just by thinking about it. Like I said, I'm more of a sentiment trader. I did get in, here in, September, October. I saw it was pretty low. I said, you know what? I'm not going to wait for 12. I'm not going to wait for 10. When it comes to BTC, and ETH was down to 900. So I said, okay, man, I'm going to jump back in a little bit more. And, it's more of a sentiment trade, man. I get, I don't want to say confused, but I get overwhelmed looking at all the charts and the candlesticks and all this kind of stuff. I just go on how people are talking, people I respect, and I listen to, and then I make my own decisions from there. But I just want to say, hey, man, thanks for doing this stuff. You're very succinct in how you, not only prepare yourself for it, but also how you explain it and why you're not only thesis, but you back it by why you are speaking like this. And so I appreciate that stuff, man. Right on.
You're super kind, man. I appreciate you a lot. So thanks a lot, brother.
Hey, right back at you, man. Cool.
All right. Take care. What a wonderful treat or gift for me to have that type of thing. Folks, while you're waiting, there's 2 tweets at the top of the Spaces. One of them's a new follower packet. I have textbook recommendations, link to Bitcoin Live, link to my YouTube, link to like the free version of my book, stuff like that. And then there's also, if you're looking for somewhere to trade, check out BingX. So there's a couple tweets there at the top, some information for you. That was just a great call. And I'm going to take you folks. I'm going to try to get to everyone. I usually get to everybody. So next up we have let's go with Battle Big. Why don't you step up, Battle Big? We'd love to hear from you.
Hi, Cheds. Can you hear me?
I can hear you, friend.
Hey, it's really,
what's going on?
I'm really grateful for this opportunity to have a direct conversation with you. It's been an honor.
Thank you.
I'm speaking from India, and it's basically right now 3:25 a.m. So it's
go to bed.
Night.
Go to bed. Your family needs you. Go to bed.
Well, I can't miss the space with chat, so I'm here.
Good.
I have been in crypto from last 5 years, and I actually recently started trading like almost 8 months, 10 months back. I've been watching your video from, I would say, 1.5 years, something around that time. So you have been a big help.
Thank you for saying that.
Before and your book, I have read your book. It's amazing. So thank you for putting it out there. Thank you.
Thank you. Thank you.
Before I ask you few questions, I just want to share my outlook on the charts. So I believe, I think Bitcoin's outlook for markets outlook is very, very bullish right now. And yes, I was also looking at the levels, this particular level around 25,500.
Yeah.
And today it got rejected from there. Still the narrative seems quite bullish. Although Dixie is pumping like really crazy, but still it has no effects on the equity markets and Bitcoin, right? Not major impact.
Mm-hmm.
I had two questions. First is
how about
like
take your first and best question, because I want to try to, and it's good to hear from you. I want to get to everybody, so maybe give me just your most important question, if you don't mind.
Okay. I'll tell both the questions. It's up to you which one you want to answer.
Okay.
So the question is basically, how are you looking at the markets right now? Yeah, market looks very bullish, but it is at a very critical point, right? So what you are looking at the market, and what will make you comfortable closing your longs, and might be thinking about shorting the market? What will make you comfortable?
Yep.
What kind of changes you want to see in the chart?
Yeah, I can talk about the different levels, and so it's great to hear from you, and I hope you have a great sleep after we hang up. And
Yes,
glad
sir.
you joined.
Definitely.
So, let me just mute you real quick while I speak, because a little background noise. The daily chart's in buy the dip mode, and it's been in the buy the dip mode since we, broke 18.5, where I went long, and I announced it on Twitter, and before that, I'd famously been waiting for 12K, and it's like it's okay, like I'm never gonna nail the bottom. I just want to kind of, get the most of the move. I want to ride the trend. And, I had a really strong bear bias, but I had to check that bias when we got back up above 18.5, because to me, that was a representation that momentum had shifted. So that's my kind of general thesis in the dailies. Momentum had shifted, the price getting back up above 18K, above the 150-day range from, middle of last year. Weekly charts is a little easier to be a bear, because the weekly chart, you're still below the 200 simple moving average, below the 50, and you're below that key support resistant flip level, the May 12th low, which I remember vividly, and the highs, from the relief rally in the summer. So you have a pretty well established confluence between, the May level, the July level, and the weekly 50 and the 200. So you have kind of all things lining up on that higher time frame that you can say all of this is just a bearish retest, but you still have to recognize the spring, right? Even on the weekly chart, you can see the deviation below 18K. It was a deviation. It was a false bear break. So you obviously still have to recognize the weakening bear momentum in the weekly chart, but you can still make an argument that it's a bearish retest, which is why you can very easily have taken a short at 25.5, because the invalidation is so close by, right? Because it's such a big level, you'd have to go long if it got above 25.5, which means that's the level to watch. You asked like where I'd be comfortable shorting. Well, I didn't, because I'm just hanging out today. I'm not trying to like overtrade this level, but I could have very easily taken a short at 25.5. and still held my longs from 18.5, because when I enter a position, I take like 6, 7, 8 positions at the same time. I break it up. If I want to put in, I don't know, $5,000, I'll do 5 $1,000 positions, and then I'll move them up. So if I get lucky, or not get lucky, but if I correctly read the price trend, and I'm able to profit from that read and that opportunity, I can move some of those stop losses up into profit, leave some lower. I can kind of hedge. I can de-risk. I can scale in. I can scale out. I can do more of these things, because I think too many times, and all the time in these spaces, traders will ask me, what do I do, blah blah blah, and I'm like, well, like if you have to make a decision for your whole position, that's really hard. That's why it's good to take partial profits and to partially, scale in and scale out, because every future decision represents a smaller percentage of your risk assets. So I break those positions up. So so that's how, even if I've been long from 18K, I can still short a little bit at 25.5, having my longs still at like 20K, 21.5K in terms of like, stop loss triggers for profit. And I'll wrap it up by talking about momentum. So I still think there's a pretty reasonable thesis for a larger inverted head and shoulders in the weekly, which means it's a question, which really means you're kind of establishing the neck baseline at 25K, 25.5, with those moving averages, with that key horizontal. And what that means is maybe you pause and form a right shoulder, and it still could be a bottoming process. And now maybe we form a right shoulder. And where's the bottom of the right shoulder, right? Because that's how you define your invalidation with the head and shoulders. So that hasn't formed yet. Is it 20K, 21.5, 22.5? I think you have to have a buy the dip posture, but you have to be flexible enough to continue to level trade it, not knowing where that high or low on the weekly might be. We have it in the daily clearly at 21.5. So it's got to hold at 21.5 in the daily. You could short there if that fails, and then certainly below 18. I think you short with extreme prejudice if it loses 18, because that would kind of be a total collapse of bullish momentum if 18K didn't hold. So there's a lot of levels to talk about, and you have to approach them all differently, and you have to kind of have a daily thesis and a weekly thesis. The way I look at things. Hopefully that answered your question. It was great to hear from you, brother. Let's move on to loans. Loan Sklee, what would you like to say? You're up next, loans. And by the way, Doka, I can only bring you up once. Doka Mook, so I won't be able to bring you up again, just one at a time. So loans. Loan Sklee, are you there, bud? I'm going to give you about a 5 count. 4, 3, 2, 1. Let's go with Dan. You've been patient. Dan Nelson. If you're there, man, step on up.
Hey, Cheds, can you hear me?
Yeah, how are you today?
I'm good. How are you, sir?
Doing really good.
Excellent. I'll try and be quick, but what I wanted to really ask and pick your brains on is the art of the entry, or kind of the nuance. And you kind of touched on it a bit just now, and with the first call.
Yeah.
But so we talk about these levels all the time. We look at this 25.5, and we look at in both directions. How do you know? It happens in stocks all the time. It'll get up to that level, or it'll just pip it, and then it'll do a mad pullback. It'll resist. What's your indicator that it's broken it, and it's broken it confidently? Is it volume?
Yeah.
Do you wait for a
There's
retest?
A couple things to talk about. There's so many things to talk about, right? So there's technique where you enter a trade and you get stopped out. Like, do you re-enter? So there's that discussion. We can talk about that. But you're kind of more asking about the confirmation method, and that has to do with a trader's style. And I'm an intraday trader, so I kind of just watch the price. Like, people who have day jobs, people who have real jobs, they have to like wait for a daily close, or they wait for at least a couple 4-hour candle closes. And so we talk about this in Trading Wisdom, and you can read about it in whatever textbook. There's like different confirmation. Yeah, there's different confirmation methods. It's a percentage move away. There's a certain number of candle closes above a level. You have to decide what works for you, because there's risk. Like if the one candle close is less risky than waiting for 3 candle closes to quote unquote confirm a method. You have to decide. I just trade intraday, and I rarely drop below 4-hour when I'm trading. I'll maybe drop to 1 hour too, but that's only when the price is at a key level. So now there's discussion of like time frame trading, and generally you want to work outside in. So I know what the weekly is at when I'm trading the daily. I know what the daily is doing when I'm trading the 4-hour. And that's the general approach. But then when volatility comes, that's when you drop to lower time frame. After volatility, you drop to lower time frame, and when the price is at a key level. you drop to a lower time frame. Like you're a scientist, you kind of, you know, crank up the magnification, you look a little bit closer, right, in those two situations. So you got to kind of take all that and find the kind of style that works best for you based on your risk tolerance and how much you can babysit and watch these trades.
Right. Okay. So yeah, mainly time frame, and I suppose there's no real way to tell the difference between an upthrust and a clear break. You
until it happens.
Until it happens.
I mean, it's just that's until it happens. I really pay close attention to upthrusts, and I try to short them or I long springs, and I get stopped out all the time, which is why when I do that, I have a pretty close buy-in validation, right? I don't, you know, if that's my idea, I'm not going to wait around and just be like super red before I give up on the idea. Like I just love taking a small loss. It feels good.
Yeah.
Because I define it's like I'm in control of what just happened, like all the way, you know, and I can try.
Yeah, you took a swing, right? And you didn't take a huge loss. Yeah,
that's it. That's what it's all about.
Cool. All right. Well, thanks for that. Cheers. That was really helpful. Keep up the good work.
Thank you so much. Check out my YouTube.
Will do.
All right, man.
Cheers.
Take care, brother. Loans, you're up, man. If you can hear me.
All right, Cheds, can you hear me?
No, not really. Can you fix your audio? Maybe rejoin the spaces and try again.
Yeah, I'm at work, so I might drop off.
Yeah, I can't hear you, bud. Why don't you try to come back? If you sound like you're in a wind tunnel or something, why don't you try to come back, and I'll get you up here. Rod, what's going on, Hot Rod? If you want to jump right in.
Mr. Big Cheds, how's it going?
It's great to hear from you. How you doing?
Good. Thanks for.
How about that audio? That was brutal.
Yeah. Oops. Hopefully it fixes it.
Yeah, I hope so too.
Well, thanks again. Just want to echo what the other gentleman said. Just appreciating the work you and everybody from Bitcoin Live. Very helpful. Question.
Thank you so much.
You're welcome. Well deserved. Question about the inverse head and shoulder potential forming in BTC, and I know the shoulders can be. Don't have to be straight. There can be like an angle, like you mentioned in your last report, that the right shoulder could be a little bit higher. Like
yes, which would be kind of like more bullish, right? That would be more bullish.
Are there limits where like the right shoulder can't be higher than this? Like meaning if I guess there's two questions. One, if there's a clean breakout above 25.5, that invalidates it, right?
Yeah. That invalidates what? Like the other bullish scenario? Because they're both kind of pointing towards kind of a resumption of the primary weekly trend.
Yeah, I guess. Yeah, you're right.
So there's rules, right? But like there's getting academic, and then there's just focusing on like, what am I seeing? Am I seeing a level that's either defined or undefined? Am I seeing a cluster of demand, a cluster of supply here? Am I seeing higher lows, lower highs? It's now I've talked about this in BCL. Like it's not like even about naming a pattern. It's like knowing how to trade it and identifying like where the trigger level is. Because at the end of the day, you're trying to execute risk and then define your risk as you're executing it, right? It's good. It's great reading those textbooks and to get a sense of the rules. But they're suggestions. These are suggestions. They're not really rules. Because at the end of the day, it's just about what the price tells you to pay attention to and momentum and whether a head and shoulders is drawn up as a regular head and shoulders or a complex with multiple shoulders and head, or multiple head and shoulders, or exactly how to draw the neckline and how to when it's a confirmed break or not. I mean, we could talk about that for hours. And but at the end of the day, you still are designing a trade idea that you have to define, and then where it would fail. And so that's kind of what it boils down to, is a balance between the kind of the academic and the actual practical execution of a trade.
Thank you so much. Yeah. This action, I'm sure, surprised a lot of people in terms of the strength the last couple of days, but also with the dollar rallying and, weakness in the S&P, it's even more impressive,
I don't know did I talk about that? I've ranted about it a little bit on Twitter. I don't remember if I kind of talked much about that in Bitcoin Live, but I feel like people get paralyzed in this idea that like the Dixie is set to rally, which means like Bitcoin can't or isn't going to. And it's just like, you got to stop that. You got to just trade the chart in front of you. And like you got to simplify everything. And so I think a lot of people got paralyzed, looking for that higher low at 21.5 because they're afraid that the dollar is going to ruin the trade.
Yeah. I thought that there was a pretty decent chance that we would retest like 20 or 20 half, somewhere around there. I mean, it's almost bananas to think that we would fly without a 20K retest, right?
Yeah, some type of a retest, and that's healthy too. I mean, you need to consolidate in order to continue, and you got to kind of shake out those short-term speculators, all the stuff we talk about. So yeah, very good, very good.
Thanks, man. Cheers.
Cheers to you. Thanks for stepping up today. Let's go with great to hear from you, Hot Rod. Let's go with Andy. Why don't you step up next?
Yeah, thank you, Cheds.
Love to have you. What's up, Andy?
Yeah, I wanted to ask you about this. You already partially answered it just before. It's about trading the breakout, because this is the stuff that I usually fail. I mean, when there was, for example, this 18.4 on BTC.
18.5.
Yeah, I decided, okay, I will short it because I got some bearish bias, and suddenly I also go to this small time frame, 15 minutes, and I see, okay, I even saw some kind of double top or just twice touching this level. So I decided to short, and then suddenly the price is going up. It went little down. It's also important because it made VIG till I think 7.9, and then it's going rapidly up to almost 19K, and then I'm paralyzed because, okay, I want to have a trade with proper risk management, and suddenly the price difference is almost 5%. And then, I mean, because when you look that 15 minutes later, it was almost 19K, and then you see the VIG that is going to below 18, then it's really such a big price difference. So still,
talk about that. Great topic.
and still you managed to open 6 longs, and I'm just curious how you did it.
I'll talk about that. And that only takes you like 20 seconds because it's all on the same platform, and you just boom, 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 boom. First of all, if you're trying to manage a risk, like get off the 15-minute chart. I mean, that's a little bit ridiculous unless you're really good. I mean, and you're probably not sitting there asking me questions if you're in that category of trader, right? With due respect, I'm going to speak to you honestly. So like stop trading off the 15-minute chart would be my first suggestion. But there's a lot to say. This is a great topic. So first of all, definitely go to my YouTube, watch the masterclass webinar. So here's what's interesting. I had been talking about that 18.5K level for a long time, and it was obvious given that that was the price floor for 150 days, right? Last year. And when we lost it, it was a devastating blow. And if you notice, as soon as we broke above 18.5, the price just rocketed. And like you said, it went way faster than you would imagined. That's because that was such an important level that everybody was watching, because that represented such a blow to the bears. Getting back up above 18.5K was just devastating to bears. And that's why, boom, everyone jammed the trigger. I jammed the trigger. I shorted lower. I shorted around 18K, and I stopped out around 18.3. And I'm like, okay, let's step back. And then I saw we accelerate 18.5. I was like, boom, I'm long here. So it's okay you shorted at 18.5. That was a solid level, but you have to manage your risk. I don't know what your stop loss was, but it should have been like at the absolute worst 19K, if not like 18.8, 18 whatever, 18.9. So it's okay to take a trade and to fail. And as long as you reasonably defined your stop loss, reasonably defined your failure. If you just got in and it went against you and you held on to it, I mean that's not good, and you got to avoid doing that. As a newer trader, you have to give yourself more wiggle room. You have to survive the learning process, which means smaller positions. Every trade should be a smaller position, right? So you can kind of manage it easier. There's less emotion, just easier to manage. I mean, you need to get more experience. So less money, and then also longer time frame. 15-minute chart, man. I mean, that's really hard stuff. I mean, that's really hard. That's very volatile. And if you're going to trade 15-minute, you need to have as my great buddy Big Jonas will say, you need to have a kind of a 15-minute target, a target based on the 15-minute chart. You don't trade the 15-minute chart because of a weekly target of a lovely thing. You know what I mean? If you're trading that time frame, that's a quick hit, in and out trade. And so for you, I would drop back and trade in like the 4-hour and start with the 4-hour chart and kind of see how that works. Use smaller positions, and then come back in the next spaces and let me know how it's going for you. Okay.
Okay. Yeah, it's helping that. Yeah, I should just avoid 15 minutes.
Trust me, I've been there. Look, I've been there. I get it, 100%. Go to my YouTube, watch the master class, do that stuff I suggested, and we'll talk to you next time. All right, bud?
Yeah, thank you, Chad, for that. Yeah.
Appreciate you, man. Stay good. Let's try to get Loans in here one more time, the guy with the crazy audio. Loans, why don't you try again? Can we hear you? Let's try one more time, bud. Hit that unmute. Loans, are you there? Lones. Loanski. Folks, while we're waiting, check out the pinned tweets, new follower resource, textbooks, links to exchange, Bitcoin Live. What's up, Loans?
Yep, how are you, Cheds?
Oh, good. How are you today?
Good. You can hear me better this time?
It's we can work with that. I can work with
Cheers, thanks, mate. I'm quite new. The question I've got for you is the amount of tokens that you should be studying. Like, should you concentrate two or four, or like at the moment, I'm
topic. What a great topic. Great topic. Yeah.
I've sort of got about 20 in there, but no matter what my bias is, I can find it. And what would you recommend?
It's a great topic. I'm glad you brought it up. So first of all, whatever you trade needs to come from, and I'll mute you while just I talk, if you don't mind. Or did you do it already? I'll do it real quick. So you want to, whatever you're trading needs to come from your watch list. These are things you studied, and you have a muscle memory on the chart. You've got history with it. You know what these levels mean. You know, one of the things you want to avoid is someone tweets something out, or in your chat room, you get an idea and then you just go after it. And you're like, oh, I want to trade that. I want to trade that. But you haven't watched it, right? There's one of my quotes in my third book, Trading Quotes, available on Amazon, is instead of buying another monitor and losing twice as much money, why not cut your watch list in half and see what happens next? That's it. Cut your watch list in half. And really know those charts, because the thing is, the best trades come after volatility, right? The best trades come after the market shakes things up. And after volatility, you can look at those 10 charts that you know, and you'll be able to contextualize that volatility and understand that you just had a deep wick below the lower Bollinger Band on the daily, and it's retesting the prior breakout level that it broke out from, and you have a simple setup for a bullish throwback, for example. So I would say cut your watch list in half, really study those charts, and only trade things that you've been really studying. And that's how I would answer that. Go ahead and unmute, and we'll wrap things up. It's a great topic, by the way. Loans, you can unmute, man, just before I move on, if you're still there. Yo.
Sorry, yeah, I'm back again.
Good. So how did I answer your question?
Yeah, so probably less is more.
Oh, it is. It's 100% more. Cut your watch list in half.
Yep, I'll do that. Thank you for your great work. Have a great day.
Take care. Go to my YouTube. Thank you, man.
Cheers, mate. Thanks.
Again, Doka, I cannot bring you up. So you're gonna have to unrequest your. I bring people up only one at a time. We're gonna go with Crow next. Mr. Crow, what's going on, Crow?
Hi, Cheds. How you doing?
I'm chilling. How are you?
Doing great, man. Doing great. Thank you for all you do. I started following you about a year ago when you were on Scott Melker's Spaces, and you caught my attention when you were talking about the EMA 3034.
Yes.
And if the daily was to break above that, and to watch for that.
How did that play out?
Yeah, yeah. Been watching for it ever since, and I actually tweeted down at 16.9 that we were going to go to 20. Just based off of that pretty much alone, and then also the deviation that I saw playing out. So yeah, thank you for all. I actually used pretty much everything that you have on your chart as far as EMAs and MAs and stuff.
That's awesome.
But yeah, so thank you for all that. So judging by how quickly we moved up and just went right past 21.5, and now it's strong support.
Yeah.
I originally thought that we were maybe going to flounder around trying to make it up to 25.5, or at least 25K, and we got there so quick.
We really did.
Now, and even with CPI coming out a little bit bearish. So I'm looking at, I used the standard Bollinger Band, and I also used 3 other Bollinger Bands that are at a period of 200 with standard deviations 1 and 2 and 3.
Okay.
So they're following the MA 200, and they kind of give me those levels those levels of like volatility, if you will. I think maybe they might be identified as the volatility channels. I'm not really sure, but we're basically right at the middle Bollinger. So not the MA200, obviously, not the one above that, but the one in the middle. And then we've got the one right above that that's sitting at 26.7 about. So currently at 24.5 is where we're kind of pushing against right now. And it's like sentiment really does matter in this kind of situation. I thought that it was going to take a while to get up here. Here we are now, so quick. We've got all these bullish signals, and it's like, how can I determine based off of sentiment and CPI, and we got a Fed meeting coming in March, right? But we were stuck down there below 18.5 for a while with really low volume. It's like, how can I easily pivot from original theses and create a new thesis that is going to better serve me? Because like at this point, I've been feeling the FOMO bad, right? For the last 12 hours, it's been bad. And I'm just like, okay, I really, really want a pullback. But then I see this shooting star. It could be a head and shoulders, doubtful because of the bullish candle that we just had from yesterday. So it's like, how do you pivot? How do you pivot your thesis based on new sentiment and new information? I know that you have those levels that you talk about, 25.5. If we break past it, you're going to go long. If we get a pullback to 22.5, you know, that would be another entry point.
Yeah.
Is that basically all you're looking at to change to pivot thesis is levels?
So it's not even pivot. I love the questions. And so here's what I find. And like, I don't care about CPI, and I don't see that in the chart, right? There's nothing in the chart that's like CPI. And so I find that it's so easy to get distracted by stuff outside of the chart. And I find like the more that I make my decision based on stuff outside of the chart, right? There's a legal term, the four corners, like with a contract, everything inside that contract is the only thing that matters, not side deals, not like things people say. So I find like the more I look outside of the chart, the more I get myself in trouble. So I don't really need to pivot. I'm just going to kind of let the price tell me where to watch. And we know where to watch now. So we're going to kind of just watch that price level interaction. And we're going to kind of, you know, pay attention to sentiment. Yes, that's outside of the chart, but that's my exception, is sentiment. And that's helped out a lot. But now we're in a mixed sentiment environment. So we're not going to get great signals on sentiment necessarily right here. We had a real deep sentiment bottom in November. I did spot the sentiment bottom. I did not spot the price bottom. And so, you know, sentiment's pretty accurate, maybe more accurate than TA. So, but there's times when there's a really big sentiment signal, and there's times when it's kind of a mixed signal. I think it's a little bit mixed here. I think we have the benefit of just really well defined levels. The weekly chart I talked about before, the May 12th low, and then whatever the August high, the MA200, the MA50. It's just a really laser. You don't really get a level that clearly defined that often. So the weekly chart is just like super easy to play. The daily chart, you're going to be a little bit more nimble, but we now are definitely watching 21.5. And I think you're in a buy the dip mode, you know, unless that breaks. And consolidation's okay. We can put in a gravestone doji, a shooting star here, drop back to 21.5, 22.5, and then try again and try to break out again. Like, let's see what happens. So just, you know, pivot with the price, let the price tell you where to watch, and then just see how the price deals with those levels. Focus less on CPI and then other stuff that's going to, you know, in my opinion, distract you. And I think that's the best approach.
Thank you for that. Thank you. Yeah, that makes a lot of sense. Appreciate you, Cheds.
All right, buddy. You stay strong.
Okay.
All right. I'll get you in a minute, Burnside. Decade. What is up, Decade? It is your turn to speak, Mr. Decade, if you're there.
Hey, what's up, Cheds? Am I coming through loud and clear?
I can hear just great. Yeah, we can hear just fine.
Awesome, man. Hey, first and foremost, big fan. Love your brand. Love everything about your content. Good stuff, man. Great stuff.
Appreciate that.
I got a simple question. I would usually Google this, but I just wanted to take this opportunity to just kind of chat with you a little.
Okay.
What is the what's the difference between a shooting star and a bearish pin, or any type of pin?
A bearish shooting star or what?
Or a bearish pin?
It's a pin bar. I just tweeted it out actually while I was talking to that guy. It's a pin bar. So that's a small real candle body, usually with like a tail. So it's just either really a shooting star or a gravestone doji, or even like a high wave spinning top or a long leg doji. Just a small body with that long upper shadow. It's at the upper Bollinger Band, and it makes sense. It's kind of reflecting that the daily's pausing at the key weekly level. The name is really not important. Like, is it a bull flag or is it a bull penny?
Yeah.
Is it a doji or a top? And I even have a chapter in book 2, Trading Wisdom, called like common naming mistakes, and I talk about that. But then I see at the end, like, actually, it really doesn't matter what you call it as long as you know how to play it. And it's just a small body. So you look at the bodies, you look at the progression of the body sizes with candlestick theory. It gives you a really good information about momentum. So if you have, like we had yesterday with the Maribozu, and now we have like a doji or a spinning top, that's clearly a momentum pause. And so now we'll see what type of consolidation we get. Do we do a flag, or do we go straight into an evening star? Do we develop into a tower top? And we've seen like a million variations over the years. So we're just going to kind of see and go from there.
Awesome, man. That's it. Thank you. Appreciate you.
Brother, thanks for having you tonight. Thanks so much. Quick reset. Folks, check out a couple links up top. New follower packet, textbook recommendations, list to my YouTube tutorials, link to my free book version, link to Bitcoin Live, link to the Twitter Spaces, which I will eventually upload this to. Also link to, they said study, so some more like learning resources on Twitter. And of course, we've got the space is sponsored by BingX, which is a wonderful exchange. You're looking for somewhere to trade, check that out. Let's go with my man Burnside Ohana.
Afternoon.
How you doing, bud?
I'm doing well. I'm in Minnesota.
Where are you?
Minnesota.
Oh, nice.
Yeah, it's 20 degrees and sunny. Yeah, and when the day comes that you get sick of me, man, you go ahead and let me know.
I don't see that happening anytime soon.
I appreciate that. The feeling's mutual, by the way. I was just wondering, so I'll save you the autobiography, but I personally, as a trader, am considerably more comfortable trading more with a scalp mentality, low time frame, typically on momentum, basically taking the higher time frames, whittling them down into sort of a micro of what we see in the macro. Staying within the four corners of the chart as instructed. But I'm wondering, it does seem as though you sort of have an aversion to trading off the lower time frames. And I was wondering, is where the sort of the discomfort with that with you personally is. I've kind of developed my style, and I think I've really kind of finally discovered my own unique trading style that's been working for me. And I was just kind of wondering philosophically, like, what your aversion is to the lower time frame stuff.
Great topic. Yeah. So I found that one of my tweets you may have seen, it's that if you find yourself like changing time frame to suit your bias, like immediately exit the trade. I don't know if you've seen me say that. I find that it's super easy to just first of all find whatever time frame to suit your bias. Like, it's a bottom, I dropped to 15 minutes, boom, there's a dragonfly doji, look at this little, and so I just find that for me, and everything you hear me talking about is like from me, for me, what works for me. I never claim to be the best trader, and I talk about like what works for me. And so I found that it's really easy for me to lose money if I go to a lower time frame. I just find that it makes it so easy for me to lose my money because I can find whatever I want. I over anticipate. I over interpret signals. And it's just like lower time frame to me means higher leverage. So it's higher leverage. I don't trade big leverage. I don't like super big swings. It's just who I am. It's how I operate. Some people are great, and that's what they do. And we need to have room for all those styles and methods. But it's more dangerous. It's higher risk, and it's easier for your bias to come into play. And that's my aversion of low time frame. The only exception is when the price is at a super key level. Like on May 12th, I was dropping the 1 hour, even 15 minute for certain times. like that May 12th day, these super January 24th, February 24th. Go look up those are the daily chart for Bitcoin. Those are days.
Yes,
those
sir.
are the exceptions for me that I would drop to those time frames just to kind of get a sense of what's going on.
Yeah. That makes very good sense. What I've personally discovered is eliminating bias, and really, where we have trends that are locked in with certain momentum movements, it's very, very easy to tell those sort of moving supports and resistances. So it's very, very easy to catch the lower or the higher higher, the lower low in order to enter a position, and it is usually with leverage, and the risk factor goes way up. But I feel like personally, because I haven't been trading for a very, very long time, that evolving into the higher time frames, I think it's going to be ultimately beneficial coming from the more high anxiety, lower time frames in order to allow me to settle into trades and allow them to really progress over days and weeks. Yeah, I mean, that's just a topic that that's been on my mind a lot because, following with Bitcoin Live and following you very, very closely, but then also trading more with the scalper's mentality, there seems to be, there's a disparity there, but I think the philosophies are still very, very closely in line. But yeah, that makes very good sense.
So also you can factor in position size too, and then we'll wrap it up. And it's great to hear from you, man.
Thank you so much, bro.
Factor in position size too. Like if you're going to drop lower time frames, it's okay to do that with these smaller positions because it's going to be harder, right? If you go to the lower time frame it is, the harder it is. So why not make it easier, balance that out by having a smaller position, because smaller positions are easier to manage, right? So don't try to work the same position size you would in a daily chart on a 15-minute chart, right? Maybe do like a third or a quarter or a fifth of the position size and just see how it works. So if you're struggling, again, that's another generalized advice. It's just a wonderful, it's like, hey, my computer's not working. Well, did you try to reboot it? It's like the first thing you do. Cut your position size. That's like the first thing you should always do if you're having trouble, whatever the problem is. It's amazing how that will solve 90% of it. So, all right.
Brilliant.
Thanks,
Brilliant.
man.
Thank you so much, bro. Great day.
Care, man. Good to talk to you. Let's see. I'm gonna try to get all you folks in here. Let's go. Who we have next? Mr. Up Only. What is Up Only?
Hey, what's up, Cheds? It's me again.
What's cracking?
Just chilling, taking a little break. I get off in like 30 minutes, but taking a little break from work.
Good.
Quick question for you. So, I mean, you often talk. I mean, I obviously watch your videos. You already know that. You talk about like sentiment being 50% almost, and then you just focus on TA levels by levels, right?
Yeah.
Recently I came to I think you almost hinted this, that sentiments could be a really strong, accurate indicator at like macro pico tops and macro pico bottoms, like 16.5K or the double top that we had at 60K and 69K. Would you say like in those scenarios it could be like 75 or even 80% that you can potentially like focus on?
Yeah, that's a great topic.
Does that make sense?
That makes 100% sense to me. I have a lot of thoughts in that.
Yeah.
So like sentiment, right? And so I kind of tracked sentiment on Twitter, my thoughts in sentiment. In last year, you noticed there were people calling sentiment bottom back to like June of 2022, like really early.
Yeah.
Did you notice that? Did you see that at all?
Yeah. I mean, the East kind of, people who were like East maxis, they were really negative at that time. Is that what you're talking about?
Yes. Yeah. Well, just that, but also in general, even after the drop down to the first drop to like 18K.
Yeah.
And then how we kind of rose. We had a nice kind of rising wedge, and we started the wedge. And so people were already calling, even after the breakdown from the rising wedge. And we had triple on the daily chart. There's a wonderful technical signal. We had triple negative divergence with OBV. Even after that breakdown, people were calling sentiment bottom super early. And I was like, I don't think so. Like, and not just me, the folks who've been around for a few cycles, they're like, yeah, no, not yet. But a lot of people were wanting to call sentiment bottom. So, we started to get some building blocks, but we didn't really have it. And then in November, it was a sentiment bottom. I tweeted it out and I said very clearly, like, I don't see the price bottom yet, but sentiment. This is a sentiment bottom. And so to answer your question, you framed it really well. The answer is yes. I think sentiment can often be one of my quotes from Trading Quotes, book 3, available on Amazon, is as a chart, something like this. It's like, as a chart guy, it pains me to say that sentiment is, it can be more accurate than technicals. I'd probably say it in a more interesting way in the book. I can't remember right now, but yeah, sentiment is crazy powerful. And at Pico, you call it Pico levels, like absolutely. And so we had a sentiment bottom before I saw a price bottom. I didn't get it until 18.5 because that was a price bottom for me. That was a momentum pivot. But sentiment was like, yeah, you start looking for a sentiment bottom in November, and in December. So yeah, sentiment is crazy powerful at the major levels, 100%.
Chance, can I ask you a follow-up, like smaller question?
Sure.
After that? So I'm thinking I'm long pretty much from 16.5K and $1,234 for ETH.
Okay.
And I haven't taken any profit, and I'm pretty lucky.
Why not?
I don't have to. Like I still have some cash that I'm holding, and
yeah,
I work. I do 9 to 5. I work in finance, so I don't have to really take profit. And I'm thinking, okay, I need to take some profit because I've been around since like January 2017, and I know how crypto goes. So what would be, we talked about sentiments, we talked about the levels after 25K breaks, and then we're probably going to go to like 30K, 32K, whatever. But sentiment wise, like what kind of signals would you be looking at? Like, are you looking at like accounts like Capo, he's like perma bear, or Jim Cramer? Do you look at that also? Like inverse Jim Cramer,
Cramer's
that
confusing. Kind of... He's so confusing. And Capo's like, he's interesting a little bit. I was more like, I started looking at him. I was annoyed that people compared me to him. I mean, just because I knew there was a bunch of, he was calling 300K at the top or what, 500K. And I noticed that he wasn't adapting to the changing momentum.
Yeah.
So I'm just looking at him now as like, what is the deal with you? Like, I mean, are you this, if you're deified by everybody, how are you missing these kind of momentum pivots? So I'm almost using him as a teaching tool to the rest of my feed. I put out a tweet today. It's like, this is how don't think this way, where it's about buying the bottom. It's not about buying the bottom. Yeah. It's about adjusting when the kind of information comes in.
Yeah, I mean, bottom's already in. That's 15.5K is the bottom.
Probably.
Most likely, like 80-90%, right? 80-90%.
70%, 70-80% for me,
yeah. So, we have to assume that it's in unless we break like 20K or 18K. But anyway, is he like trolling? I don't even know how to pronounce his name. Capo.
I don't know, brother. I honestly, I've never followed him. I've never followed him, so I don't really have a good feel on it. So I don't want to disparage him. It's more of his, like, what he's, the approach, and I'm kind of a shepherd of my followers. So I'm
would you take some profit, or would you go short once he becomes kind of bullish? Or
that's something to pay attention to. Yeah, if he flips bullish, I would definitely I would absolutely, and I'll put out a tweet. You will see me putting out a tweet.
Right.
I actually already have a tweet that says, like, take profit when Capo goes long. So but that's just for fun. That's that's just shit posting too, honestly. But there's like it's a tiny bit of truth to it, but that's mostly shit posting too. Like, so, my Twitter account, I want to have some fun too sometimes. I mean, so I try to be a professor and serious, but I also kind of want to have fun. Like, otherwise, what the hell? I won't be able to keep doing this if I can't have fun with it. So, anyway, that's all it is. Thanks, man.
Cheers. Yeah.
Cheers. Let's see. My man Maddie is in the house. What is up, Maddie?
What's going on, Cheds? It's been a while. Good to hear from you.
You too. How you been? How's everything?
Great. Up only totally stole my question. I was absolutely going to talk about sentiment and how it is a beautiful addition to your toolbox of gauging sentiment of additional signal. And no one steal my idea. I was going to tweet this Monday, but I love the bigger accounts when they run polls, just because they can get an accurate poll of 2,000, 5,000, 10,000 participants, which is so key. Like, if you got 10,000 people that are going to vote on a Bitcoin sentiment poll at the bottom of a bear market, so they're already filtering themselves if they're even still paying attention. And here, that is massive. So
Yeah.
Yeah. I was
So,
just
but
gonna
that's
double down
interesting
and
though. But
reiterate
along
that.
those lines, Matt, it's also about how you frame it too. There's all the
Yes and no. I mean,
and how
yes
you
and no. You
order
can
the
basically,
questions, and
yeah, yes and no. I mean, you can basically reduce them down to, are you bullish or bearish?
Yeah.
And
Then people will say, well,
so
over what time frame? People will come back and say, well, there's all this
yeah,
caveating.
that's very true. But I mean, you can. So to jump to it. In your time frame when you were talking, I want to say June or July. You're absolutely right. You were getting some wild sentiment polls. And I noticed that one from like BitBoy, where 70% of he was bullish, but like 70% of his followers were bearish.
Interesting.
Yeah, right. And I tweeted, replied like, okay, honestly, probably gonna get a short term relief rally, but when these polls are saying 80-90% bearish, bottom, absolute bottom. And then sure enough, like you just said, in November, everyone was putting out the same polls. 80 plus, 85 plus,
that was
bearish.
Yeah.
Everyone's accounts too. Like not BitBoy, but like John Wick.
Sure.
What's his name? Even Will Clemente. Like it didn't matter. All of their polls, and okay, bottom.
It's crazy how we try to I know we wear clothes, at least some of us do, and we have all these computers in our pocket, and we fly around in airplanes, and we think we're these like super creatures. We're just still like emotional animals, and like we wear our heart in our sleeve, and our actions are often a result of like our feelings, whether we even realize it or not at the time, And so it's just amazing to see how sentiment plays into it, and how for me, as a poker player, as someone who's like studied psychology, it fits. That's why this all fits what I do, and that's why it kind of works what I do. And so I think I just encourage people to think about sentiment and as much as you can. It's not always easy because it's for some it's easier for some people than others, but something like you put it, like a poll, that's a really nice and clean, neat way to measure sentiment, Matt.
Yeah, and you don't even have to do the work. I mean, these bigger accounts, they have the followers. Just look for the ones that have like a 5,000 person response rate for people who are actually still here paying attention to Bitcoin in the space.
Yeah.
That's some signal.
It's good. I think it's probably always going to be that way. And I think the sentiment bottoms will probably always be more clear than the price bottoms. So, it is what it is. I'm always going to wait for the price, but I'm still watching the sentiment.
And I also wanted to give you your flowers. This is a little older news, but when you flipped bearish to bullish as soon as 18K started to break, I mean, not to brag, I was already in, but when I saw you pivot on a dime right there, like, damn, that's old school. That's how you do it.
Oh, I overnight
I
became a perma
like,
bull. I was overnight. Oh, thanks, man.
Yeah, I mean, we were all, everyone who knew what was happening was watching 18K like a hawk, and I was immediately impressed. I mean, because who knows? It could have bounced right off of 18K, and we continue on in the lower range. But I was very impressed while you pivoted on a dime, went long, and rode that sucker up.
I didn't want to. I wanted to be. Look, thanks, man. By the way, thank you. And like, I wanted it to go to 12K because I've been calling for it from like 40K, and we were so close, and it would have been great. It would have been like a super cool move, but like, I still had to pay attention when it didn't reject at 18K. It was supposed to, right? Everything I've learned professionally studying TA, when you have that well established a level and you lose it, right? It really should reject on the retest. 80-90% of the time, it's going to reject. And so when it didn't, I was like, I have to go long here. And I was immediately perma bull because it was such a significant break. And you saw the market react immediately. When the market reacted as strongly as it did to the break, it confirmed for me that everything I'd been looking at was right. I was listening to the price. The price had established that level. And then just the follow through is made. It's been an easy trade because the fall, in many ways, not completely, but the price, the pace at which it, and how well it used the EMA 8 on the way up on the daily. It was just super clean consolidation on the way up, and it's been a fun trade. So thank you, though. Thank you, bud. All right, man. It's great to hear from you, man. Let's go with Alvin Mutyaba. What would you like to say, Alvin? And Matt, thanks again, bud.
Hi, Cheds.
What's up, Alvin?
Can you hear me?
How you doing, man? Oh, just great, just great.
Yeah. Thank you for everything you're doing.
Johnny, you're next.
Yeah.
I won't, Johnny. I'll get you next. I promise. Go ahead. Go ahead, Alvin.
Thanks for everything you're doing. I'm watching you closely. Like you, I think you are one of the best, or the best one in TA.
Thank you. No, I'm not, but I try to be good.
Yeah, but from people I know, at least I believe. I wanted to ask you a question about the leverage. What is your favorite leverage?
Yeah.
What leverage do you use?
Like
usually?
2x, maybe 2x.
2x.
2x, maybe. Yeah.
And how much when it goes negative, when you basically against how much you're willing to lose, or if you.
It depends on the trade. I don't use a dollar amount because for me that's, and I write about this
in a
Trading
percentage.
Wisdom.
Would you say like a 25%?
That's also arbitrary.
Okay.
I write about that in Trading Wisdom. You can do a dollar amount. You can do a percentage. Mm-hmm. It needs to be based on your trading idea.
Okay.
My stop loss is when the idea fails, which means I need to structure ideas that that are pretty easily defined, and my invalidation isn't 50% loss. Which is why it's timing. Which is why with discipline, I'm waiting. If I'm playing a bullish throwback or a retest of support, I try to wait as close as I can to that key level. I try to play enter as much as possible, as close as I can to a key level, so I can have a close by invalidation. And so my stop loss is my idea. It's not a percentage. I don't just say, because what if 3%, or it depends on it. I don't do percentage. I do with the idea, and that's my invalidation.
All right. Thank you. Thank you,
man. Take care. Good to hear from you. All right, this is going great. Let's Johnny, what's cracking, Johnny? What would you like to say today?
Hey, what's up, Cheds? Good to speak with you again.
Thank you.
Interesting day today in the market.
Yeah.
It really flips things kind of upside down what I was thinking. I was doing a lot of charting today, looking for patterns in the daily, the weekly, and the monthly on Bitcoin. I was noticing a cup and handle pattern forming on the daily. And I don't know if you've talked about any of this because I just hopped in the space, so I don't know if you've said any of this, but cup and handle on daily, a good one forming on the weekly, and then on the monthly, it's interesting. Not a cup and handle on the monthly yet, but what I'm really looking for is in the next 11 days when we close, we're sitting right above, right at that 50 EMA line right there. So what I'm really, yeah. So what I'm really looking for is this monthly in the next 11 days to close above that 50 EMA. And if I do see that, I think we're definitely going to rip about 30% up into the 32K range. And, that's a critical retest point, which, if that doesn't hold, then I think we spoke about this the other day. We both had this thesis on 12 to 13K. I think we'll, head down in that direction. But if we do hold that, 30K as support, I think that is the confirmation for the bull. But I was just wondering what your thoughts were there with that monthly closing on that 50 EMA, if that is, a bullish indicator for us, to rip the 30. And if you were also seeing that cupping handle on the weekly, I just did a tweet about this maybe about an hour ago with, these two patterns and these charts. So I don't know if you have the charts in front of you, but yeah. So I just wanted to kind of get you. Yeah.
Let me jump in. That's a great way you set it up. And I was just thinking when you were talking, you went to the monthly. My first thought was, I never look at the monthly because for me it's too young. There's no 200 moving average. I think you're kind of you're limited data, but like other people look at the monthly. So fine, let's I pulled it up while we're talking. Then you said 50 EMA, and I thought, okay, that's interesting because I use the 50 MA, right? And generally, and 50 is fine though, because for me, and this, you think about EMA and exponential moving average, it's more sensitive to the most recent candle, right? And so that's why you should be used for short term 8, 2134, 1226. Like some people use the 200 EMA, and that's so weird. It's just weird to me. Like if you're going to use an EMA, you want it because it's a short-term, quick bounce off. Like the whole point of a longer-term moving average, like a 200, or even for 50 for me, is you want it to be a bigger deal when the price interacts with it. And so when you have an EMA, it's more likely the price is going to interact with it, right? So that's why 200 EMA is crazy to me. 50 is fine. For me, no more than, I wouldn't go above 50 for an EMA, but I get people doing 50 EMA. I'll say, okay, I get it. You're right in the line for me. But then the other thought, the greater thought, is that it's great that there's so many different approaches to this, and you could very intelligently articulate to me your thesis on a monthly time, on a time frame I don't even use, with a moving average I don't even use. That you can explain that in a way that I'd say, okay, I get it. You know what I mean? So that's what's great about this. Those are the first couple thoughts, and then cup and handle. Cup and handle or a head and shoulders, it's about the trigger level. Doesn't matter what you call it. I see a potential inverted head and shoulders in the weekly. Let me go back to the monthly. If we're going to go monthly, I'm definitely not looking at an EMA. I'm looking at the wicks, and it's a very clearly described support resistance flip level on the low of May, on the high of July, and the high of August. And that's why I know exactly what to look at. And we're right. That's the only thing to look at. That's the resistance. If you're above that, you're bullish. It's not the 50 MA or EMA. When you have that a defined zone based on those wicks, and it's a clear, clean horizontal, you don't need anything else, right? So that's kind of just how my approach would be on the monthly. And the weekly, you see that as well. It's even better described. I see a potential inverted head and shoulders developing in the weekly. I see the potential to form a right shoulder here. If we do reject here, which it looks like we probably should, with the daily candle that's coming in with an hour to close, shooting star, or last time I looked at it, it's okay for it to pause here and still be bullish. It's okay for it to pause to form a right shoulder. So we'll see how the right shoulder forms. And when that does, that gives us an invalidation level, a further invalidation level for the bull thesis once the right shoulder is formed, and gives us a more structured neckline base, which is the trigger level, the breakout level on a head and shoulders, and maybe even a cup and handle. So, if it pauses here, which it probably, let's say it again more simply, if it pauses here, which it probably will, it's okay. We're going to look for a higher low. We're still buying the dip, certainly as long as 21.5 holds, and we'll let the kind of weekly time frame play out. But it's still all about that horizontal level we talked about in the monthly. It's so simple right now. The price has given us just a really, really clear and obvious level to watch. So we don't have to spend too much time like naming it or getting too theoretical. We just know where to watch from a momentum standpoint.
Yeah. And when you were talking about the moving average versus the EMA, the interesting thing is they're both pretty much almost touching right now. So so that's interesting. I tend to use the EMA more just because of the volatile crypto action, but it definitely makes sense what you were saying with the smaller time frames for the EMA versus
that's the purpose
using
of it. That's
MA.
the whole purpose of it, right?
Yeah.
Why would you give the price like on a 200? What's the point of giving such a strong price weighting to the most recent candle? So anyway, good.
Yeah.
Great topic.
And then the other thing too, I want to ask, it's interesting today because on the weekly, obviously we had that death cross that was occurring that's never occurred before. And then today it flipped and it's gone because we had such crazy price action today. So what are your thoughts on that having, the first time ever when obviously on the daily we had that golden cross. Obviously the weekly is going to give you, more validation, but now it just totally flipped in, one day of action. Were you looking at that at all?
First of all, one couple things. So when you think about, there's a lot to talk about here. So think about like a weekly candle. When the weekly candle's only half done, like it is now, half completed, you can't even look at what the moving the last like little piece of data on those moving averages isn't real yet, right? Like because that calculates on the candle close. Same with like an RSI or an OBV or any kind of indicator, it calculates on the candle close. So whether it just crossed today and now it uncrossed, like that doesn't even exist.
Gotcha.
Like that's not even the thing. Okay. Secondly, you want to be looking at, with a moving average cross, there's several things in play. Talk about this in trading wisdom and a lot of the quotes. So you like a moving average, if it's going to cross, it needs a trending market to cross and reverse from, right? So if it's a sideways market and then you cross something, like that's not really a signal. But if you have a strong move down and then you get a cross up, yeah, that's a signal. So that's one thing to keep in mind, number one. Number two, you want to look at the price proximity to the cross. So like if you get, like, say, a golden cross but the price is already like 20% higher from where the prices are crossing, like some of that move's already baked in. So you want to look at the price proximity to the cross, whether or not a move is baked in. The weekly chart is right at the price. So that's good for it being a stronger signal. However, like the MA50 is kind of flattening out. Like, so you have a kind of very, like an unaggressive cross happening here, right? You want to look at the slope of the crossing moving average, in this case, the 50, right? It's kind of flattening out. So like you could very easily, having looked at, it's never happened before on this chart, but having like studied charts as a chart technician, you've seen a million times a cross here that would kind of recross in 5, 6, 7, 8 weeks or whatever, back up. Like, because it's a casual, it's kind of like you're skipping a stone almost on the water type of cross, right?
Yeah.
So that's you got to look at that. So that's your context. Every signal is context, and people don't get that. It's this, so then XYZ happens. No, it's the context of the signal, the power of the signal. What's the volume behind it? What's the candle? You know, a million things I could talk about, but we're running out of time tonight. So great topic, man. Thanks for stepping up.
Yeah, thank you. Appreciate it.
Thanks for letting me riff. That was fun. I'm gonna wrap up. It's been about 90 minutes. Wonderful spaces. If you're listening on the replay, I've uploaded it to my YouTube in Cheds Trading, the Twitter Spaces playlist. There's 2 tweets at the top of the thread that will help get you started. New follower packet, textbook recommendations, links to free learning webinars, free version of my book, How to Find Bitcoin Live, further study material, and also have a link for BingX sponsoring this space. Is a really great exchange. If you're looking for somewhere to trade, check that out. This is conversation 28. I've had 28 of these. It's awesome. I just love talking to you folks, letting me kind of riff and philosophize and talk to you one-on-one. We're hanging out, right? When I tweet something, maybe tweet back. It's easy to fight with people, on Twitter. So I'm glad that we can do these conversations. All right, folks. Thank you so much. Thank you. Thank you for listening to another one of the Twitter Spaces Ask Me Anything. This is episode 28. This will go into the playlist on my YouTube at Cheds Trading, in the playlist for Twitter Spaces. While you're there, check out the masterclass tutorials, check out the market updates, free version of my book Trading Wisdom, which you can get for free on YouTube. It's also available on Amazon, as well as my recently published book Trading Quotes, which I published as well. To remind you, I am a founding analyst at Bitcoin Live. We do a twice a week full market update there, rain or shine. And just while you're there, check out the public blog, free reports. I have the March report available for free. Folks, thank you so much, and I will talk to you soon. Big Cheds out.